The Magnificent Seven stocks are coming back into focus this week, with 4 of those 7 reporting earnings. So the Magnificent Seven, here we're talking about Alphabet, Amazon, Apple, Meta, Microsoft, Nvidia, and Tesla. Those that are reporting this week are Apple, Meta, Microsoft, and Tesla. So these are the stocks, the Magnificent Seven, that have been very much leading, or had been leading, stock markets higher for much of the past 3 years. They've been responsible for most of the market's double-digit growth. However, at the end of 2025, Wall Street started to grow a little bit skeptical about the hundreds of billions of dollars that these companies were spending in AI, and when returns on those investments were going to materialize. So we saw a sort of rotation and a pullback in demand for those stocks. The index tracking the share price of the Magnificent Seven hit a record high on October 29th. But since then, we've seen it fall lower. 5 are actually now trailing gains in the S&P 500, with only 2 companies, namely Amazon and Alphabet, actually booking gains. Now, the results, the earnings from these companies come as we're sort of seeing this great rotation out of tech stocks and into other areas of the market. And that's really ramped up in the recent months. If we just look at the S&P 500, that trades up 1.6% since early November. But if we look at the equal weight, which strips out the S&P 500 market cap bias, that's actually trading 6% higher. Sort of areas such as materials, industrials, financials, healthcare, and consumer sectors have actually been outperforming, and also small caps and the Russell 2000, that's jumped over 7% across the same time frame. So this rotation that we're seeing out of tech and into value, be that large cap cyclicals or small cap, comes as in sort of investors are optimistic really that the US economy could strengthen and broaden out that rally across sectors. Now, obviously this optimism doesn't come without its risks. The labor market in the US is still showing signs of weakness. Obviously geopolitical tensions have been very much elevated. And now there are also some concerns about potentially another US government shutdown. But big tech earnings, which have really long outstripped the S&P 500, we are expecting to see earnings growth starting to narrow. And that's at a time when we're seeing investors growing, increasingly concerned about this massive capex. The earnings from the Magnificent Seven, I think these could really serve as a litmus test for investor appetite for big tech. Given that most of the big tech share prices haven't actually done that much in recent months, it does mean that valuations aren't as lofty as they have been entering into previous earning periods. But the other thing to keep in mind, I think, here is if we do see strong results, that could signal sort of a return, or if we do see strong results or, strong returns on AI, then that could, I think, reignite enthusiasm for big tech, for that AI trade. But I do think any disappointment that we get could actually reinforce this growing and increasing rotation and further weigh on big tech's dominance within the S&P 500.